Well, it is Thursday, and therefore, Bradford Ferguson in Carmel, Indiana, not Carmel, but Carmel, Indiana, is here with us today. For those of you who missed the story, Scott Walter the other day was explaining to me that he was visiting Bradford and he said Carmel, and then later corrected me when I said Carmel. So what are you going to do? Scott, I'm letting you know you've got a shot. You get a shot back at me next week. But I told Scott I have always wanted to live just a few miles south of here at Carmel by the Sea, because is that the most beautiful sounding name of a city you've ever heard?
It sounds very hoity-toity, right?
And it is.
Yeah. Yeah, it's a big weekend. Tesla Owners Club of Michigan had their Tesla summer meetup
Right
in Muskegon, Michigan, and there were quite a few people there. Brian White was also there, a bunch of influencers from Europe. John from Tesla Owners Silicon Valley, Dirty Tesla was there on his home turf, and
Sandy Monroe and
Sandy Monroe, Jordan Gieske of Limiting Factor. So that was fun to see and hang out with all those people and talk a lot of Tesla, talk about Rebellionaire, and it's good.
All right. Was there any takeaways for you? Was there any big anything you heard on the stage or in talking to folks that you didn't know or you did know and it got confirmed, or something that our listeners would love to hear about?
Well, the big reveal Sandy gave on stage was he handed a 4680 battery to Jordan for UC San Diego to study, and a very, very generous gift from Sandy. And he said it was a dry process that they used for the battery. Right. So they've used a mixture, I think, between dry and wet on the, I'm going to get it wrong, dry battery electrode, I think. So
you got it right.
That's good news. If they're getting that going, that's meaningful. But I think they're still ordering both as they get it figured out.
Oh yeah, I think so. Yes. So, and then that dry battery, battery is on its way to San Diego via Brian White, who you said dropped by and said hello today.
Yeah. And we drove a bunch of roundabouts. I shot a video with Brian White where we talked about Tesla's new articles of incorporation for Texas.
Yeah.
Which maybe we could talk briefly about. So it's been a good day. It drove great too. Made for a boring, safe video. Yeah.
Well, all right. Since you brought it up, what was the conversation about the incorporation in the articles, the new articles for Texas?
So this came from Tesla Boomer Mama. She was first to post this. They provide for preferred shares.
Okay.
And with preferred shares, they can structure the shares to do special things where they might give a different dividend than the normal shares, or they might have different voting rights.
Yes.
A different number of votes per share. And so this was not allowed while they were incorporated in Delaware. So, besides the Delaware courts just opening them up to any attack from any direction, once they IPO'd, the way the law works in Delaware, they couldn't create a new share class structure.
Right.
But you moving to Texas allows them to do that. Now, this doesn't mean they can just hand Elon a bunch of votes. They probably need to be approved by shareholders.
Undoubtedly, with a 400-page disclosure.
Yeah. But it's good news in that, like, shareholders don't necessarily have to give Elon a ton of economics.
Right.
Elon said he mainly wants votes.
Exactly.
We'll see. Right now, Elon owns 13% of the company with straight stock and another 10% with the options that he just got back because of the shareholder vote. That puts him at 23. However, when he exercises those from the 2018 plan, he'll have to pay taxes.
Mhm.
So lose about half of those. And so he would go back down to 18. Now, that's not necessarily our problem. That might be Elon's problem, but
Yeah.
he does want to get to 25%. And so these preferred share class that the move to Texas provides for, I think is pretty exciting, because like I don't think shareholders were like super thrilled about, you know, having to dilute shares.
Right. He could sell shares in SpaceX to raise the money to pay the taxes.
Yeah,
Then
he could
therefore,
do that. Yeah.
yep, always, because he owns a pretty big chunk of SpaceX. So losing a little percentage there might not be so bad. Anyway, I'm not going to tell him how to run his life, and
Yeah.
we'll see what the board of directors comes up with. But I think it does kind of set up the main question I had for you today, which is kind of interesting. Oh, was there any other parts of the new incorporation articles that were interesting, or was that just
that stood out the most to me? Yeah.
Well, all right. So Tesla is going to expand battery production in Nevada, opening a small facility using idle equipment from China's CATL, according to Secretary. And Tesla will have full control of the facility, cover 100% of the costs. CATL personnel will be uninvolved other than to help set up the equipment. And the plant will make cells for Tesla's large battery megapack project, part of the broader effort to onshore the supply chain for lithium iron phosphate cells in America to take advantage, of course, of the IRA. Tesla also sees the equipment purchase arrangement as a cost-effective way to set up a new facility. All makes sense. You are, of course, the world's expert on megapacks and megafactories and making batteries for megapacks and stuff. So we've known about this setup for quite a while, and then there was some new contract entered into to buy some lithium today, I believe. Or no, was it lithium for that factory? I think so. Yeah, for the batteries, I think. Anyway, any thoughts regarding all of this from your desk?
Yeah, I don't have insider information. So I don't know like how far along they are in getting that equipment set up. We've had that news for a number of months.
Yeah.
So I'm guessing the equipment's already in the US.
Yeah.
And that they're already trying to, get it all dialed in and get it running. It makes great sense for them to make a deal, because CATL, the US government really doesn't want them making batteries in the US. So for them to sell their equipment to Tesla, I think is a match made in battery heaven.
There you go.
I'm not sure if batteries are 100% of the limiting factor for Megapack. They're definitely a contributor, but I'm hopeful that they are. I think the battery makers are really struggling to make enough. So even though they've been moving aggressively to keep making more and more,
you're saying the U.S.
there may still be a shortage of batteries just from like CATL, BYD, LG, all that.
Gotcha.
So yeah, I'm curious. Hopefully we start to see something come online starting sometime next year.
That's what the
it being in the US makes me think it'll be later next year rather than early next year.
So, all right. So now going back to corporate matters. So this is my wild and crazy idea for the day. Okay, and you get to hear it first.
Okay.
X is setting up one of the largest supercomputers in the world in Memphis.
All right.
NVIDIA, Dell, TMC, all major suppliers for that effort. And combined with other resources, it could be the place from where AGI might ultimately spring. Meanwhile, Tesla is building one of the largest supercomputers in the world, and AGI might ultimately spring from there. This is part one of the question. Does that give you any cause for concern that these two things are potentially competitors, potentially complementary, potentially products could come out of one or the other that some people might think should have belonged to the other. What do you, it seems like this is the first time where his various companies are really treading on some perilous ground with regard to deciding who gets what.
Mm-hmm. Yeah, I don't think Tesla is working on AGI. It would behoove them to have, a super smart computer in the car and to really do a great job looking at videos. Like if somehow the Optimus system can watch a YouTube how to do it video and know like how to make a part or fix a sink or whatever, just by watching that video, that would be extremely powerful. Like that's where I think it could come in for Tesla. But I think what xAI would be planning to do would be more general and more broad and wouldn't just apply to autonomy in cars or work in bots, where AGI can be more of a disembodied intelligence, and you could have millions or billions of intelligences, like provided you figure it out, doing useful work, and they wouldn't need to have a robot form to do that. And we already have that a lot with like ChatGPT and all that.
Yeah, but we also have Dojo, which is Dojo as a service, is a potential product, which he says would be competing directly with NVIDIA. That the only way he'll actually come out with Dojo as a service if there is a case for it in terms of competition with NVIDIA.
Did Elon say it was competing directly with NVIDIA? Because
yeah, he said it would have to perform. I forget the exact words he used. The implication I took away from it was it would either have to outperform or underprice or provide a niche. It would have to be something that would allow it to be superior in some way, so that it could, it'd be a useful product compared to NVIDIA.
I think what Elon was saying was that it needs to be better, Dojo does, in order for Tesla to use it. So like if it's not better than NVIDIA, then they're not going to scale it.
Oh, okay. Well,
so I think that's more what Elon was saying, is like at the point where the engineers are like, hey, we need to run this on Dojo, NVIDIA can't do the job for us. I think that's what Elon was meaning by that. But they haven't totally dropped Dojo, which is nice. Elon just tweeted today about all these power needs that they're going to need for compute at Tesla, and talking about, I think, 120 megawatts by year end and maybe like 500 by year end of next year or something like that.
Yeah.
And their compute has actually scaled faster than what they talked about on Investor Day. So I don't know if it's Investor Day March of last year or shortly thereafter, they released this diagram where they talked about how much they were going to scale the compute, and it's actually grown faster than what they said. So like that's been a positive surprise where it's happened faster.
That should make the stock go up, quite frankly. If people are serious about, paying attention to things that actually matter, that should actually cause the stock to go up. Okay, well, let me
thinking conceptually about this, like people are going crazy about NVIDIA and the profits they're making off their supercomputers. Tesla would not be buying these computers if they weren't at least worth at least that much to Tesla.
Oh yeah.
And they're probably worth some kind of multiple on top of that.
Oh yeah.
So like if Tesla's buying worth 2 billion, then they're getting maybe 4 billion in value out of it, maybe 8, maybe 16, we don't know.
Right.
And I think that's the next leg to this, where everyone's giving NVIDIA the value, they're giving them the win, whereas there's going to be a lot of companies that derive much greater economic value from here. We just haven't quite seen it yet, like on real tangible paper, but I think we will.
Okay, so now I'm going to go to the meat of my question. We now
Okay.
have Elon Musk sitting on the top of a cohesive ELO system. ELO system, Elon system. I'm not sure.
Elon
We need to
system.
come up, we need to come up with a name for this. 6 companies. They have mostly very different missions and products, though there's some troubling overlaps we just discussed with xAI and Tesla. However, the Boring Company uses Teslas in its tunnels in Vegas, and they just finished a tunnel from Tesla to for Giga Texas. SpaceX and Tesla trade abilities all the time, and the dishes, the Starship dishes will, sorry, Starlink dishes will, or people are already putting them in their cars and their trucks and stuff, and so that could be where every car would have one at some point. Tesla advertises on X, and X gets a huge advantage for the loyal Tesla fans. Grok will be needed on Optimus and all the vehicles. LLMs, AI, and AGI are required for all the companies. And then we have the phone idea. And Elon said today that in the future, there won't be any phones. It'll be Neuralink to Neuralink. So it seems as if what we now have is probably more so than any company in history. I'd say for sure, if you count all of that together, where he has controlling interest of all of these companies, is it time for him to formalize that arrangement? Now, we know, before you say anything, we know we do not want a overriding public company that is some kind of a holding company for all the companies, because Elon has said that clearly. Everybody understands that would be horrible. I think everybody understands that. But should there be some kind of cross-pollination, all the different companies all buying a piece of Tesla or trading shares for shares, so that it all is somehow interwoven with an allowance that everybody makes money if this company makes money, and should there be clear-cut contracts, very clear-cut agreements with regard to the bookkeeping as things are shared, traded, borrowed, sold, etc., between the companies?
Yeah, I think there should be clear contracts and clear boundaries between the companies, just so there's a clear understanding, and that protects Tesla and other companies from potential lawsuits, people saying conflict of interest or whatever. Elon could say, well, Tesla shareholders have benefited greatly, but let's measure that. And so I agree with you there. I think there's a great benefit to the cross-pollination. Like what other company has gotten a boring tunnel before Tesla? Like no one else did.
Right.
No other individual company has. So there's a clear benefit. One thing you're talking about there is maybe where Elon creates a holding company where he can place certain shares and some kind of proportion into this holding company, and maybe people could buy into that, and then Elon could use that as a way to maybe sell some stock or to get liquidity. There might be something that Elon could benefit that way. There are people that they want access to Neuralink. They want access to Boring Company as investors.
Yeah.
Maybe they won't give direct access or like pure play access to, like, you put in $1, you get $1 of Neuralink, but maybe he could do it where you get some percentage that people will be happy with, things like that. So I think that's something that's probably kicking around there somewhere.
So my idea would be more like a case of where if Neuralink, I mean, you'd have an outside appraiser come in to do this, of course, but if Neuralink is worth 10 billion and Tesla is worth 100 billion or a trillion, you just come out with an amount that would be equivalent in shares. And let's say it wouldn't be exactly this amount, but let's say Tesla would end up owning 10% of Neuralink, and in exchange, Neuralink would get 0.001% of Tesla. And then you just go around the other companies that way. Tesla would end up being kind of the holding company or the middle, because it's got the most reasons for the interrelationships between the other companies. But so Tesla, and it's also public, so the shareholders are more interested in having that understanding and that arrangement. So, but that way, there will be a fair outside arbitrator comes in, makes the decision as to how many shares, and then all of a sudden you've got this kind of central hub around which things could happen. None of the companies that are not public would be public. There would be no more requirements of any SEC oversight or public oversight over the satellite companies. But
Right.
you would still have the same arrangement you have now with the public company Tesla.
Yeah, it could be a way to create more transparency in a way, to just, put it down on paper. I can see where you're coming from. That makes sense to me too.
Oh, good. Finally.
Yeah.
Oh, I'm kidding. You know, that's why I brought it to you first instead of Larry,
Well, Larry isn't gonna like it, I don't think. Yeah, I think most people aren't in favor of like the X holding company concept. But to create more transparency and to outline boundaries and contracts and all that, I think could make sense. I think it could also hurt in some ways where already Wall Street doesn't give Tesla credit for Tesla bot,
Right.
or I don't think they give them much credit for autonomy.
Right.
And then if they add shareholdings in Boring Company and Neuralink, they're definitely not going to give them any credit for that,
Right.
and may even penalize it,
Oh,
Tesla. So it could potentially be worse in some ways. That's why I think you do it with some kind of smaller holding company rather than with all the shares, or
yeah. I think the reason people are against the holding company idea, at least I'm against the holding company, is if it's a private holding company, then unless all the shareholders of Tesla get a representative, again, outside auditors, opinion, unless all the shareholders get a piece of that holding company, which that'd be okay with me. If they got a piece of the holding company and it remained private, okay, that might be okay. But if it's a private holding company that the shareholders don't get a piece of, then you've got a bunch of private individuals who get the benefit of the holding company. Now, if it's a public holding company and we can all go buy shares, now you've got another problem, because now you've got that's public, and now everything, I think, becomes open to public scrutiny, maybe.
Yeah.
As opposed to a minority shareholder of each.
So what I'm talking about is where Elon could do this today without a shareholder vote or whatever. He can decide to just assemble a certain number of shares of Tesla, SpaceX, etc., into one holding company.
And he owns,
that he owns, or he controls or manages.
Right.
And then he could sell shares of that to investors.
Yeah.
But he doesn't really seem to need cash except to pay taxes, or want to really give away many votes.
No.
I think eventually with Mars, it could get controversial where, SpaceX may have to spend a lot of resources to gear up for Mars, where that could eat a lot of profits that SpaceX is making from Starlink. And that may not be popular with other shareholders. Other shareholders might be like, hey, we want the profits. We don't want the
Mars, yeah.
the dream of Mars. We want profits. So
Of course, if you listen to
I
Brian,
think Elon wants to keep votes.
if you listen to Brian Wang on that, he thinks that Starlink will be the #1 largest company, even bigger than the humanoid robot side of Tesla, because it ultimately could be the #1 Wi-Fi
communication system throughout the galaxy.
Yeah, right. So it could be huge amounts of monthly income. Anyway, we'll see what happens with all of that. All right, let's see. So with regard
like if Elon could play Diablo from Mars with no latency, that's the dream. All right, sorry.
Right. So, all right, so then everybody, of course, the big talk right now, I mean, pretty much every channel has done it to death, but I wouldn't want you not to have a chance to talk about it, because we talked, right? No, did we have a meeting on, after last Thursday, after the shareholder meeting?
We met before, I think.
Before the shareholder meeting.
Yeah.
Okay. So since then, we've had the shareholder meeting. The shareholder meeting was obviously huge in terms of what Elon told us, stuff that we didn't know. Nothing, I don't think, was any bigger than the fact that he told us the bots cost 10 grand and he can sell them for 20. Then later on told us he'd rent them first. Told us that he thought he could make 100 million a year of them. Told us he would put 1,000 or so, 1,000 or a few thousand into the factories next year. And then he would ramp up big from there. And of course, Scott and I have talked about the ramp from a few thousand to 100,000 or 1 million will not be that hard, to be a pretty fast ramp. And the other makers have told Scott that they also think that once they're making a few thousand, it's not a big deal to ramp to 100,000. So given all of that, how did you come out of that? Assuming you already knew all that, or you agree with all that, how do you look at Tesla, the company right now, compared to other investments or compared to other things that you've done in the past?
Well, I want to first talk about how Elon was talking about the bot.
Okay.
And then we'll bring it back to how Matt Smith and I think about it at rebellionaire.com.
Okay.
So I think Elon was thinking about it in the limit, where Tesla eventually gets the cost of Tesla bot down to 10,000 a bot.
Right.
They're the largest maker of humanoid bots at scale, and that they would only be selling them for 20,000 each. And the reason I say that is because, right now, if the bot gets as fast as a human and can, work 21 hours a day, and let's say they can keep it busy, then effectively the bots can do like $200,000 worth of work every year.
Right.
So, Tesla can use a bunch of those to scale Gigafactory Nevada, Giga Texas, etc., and keep all those savings and have it drop right to the bottom line and profit.
Right.
And the bots don't just wear out in a year. Like I've had conversations with Scott Walter. These electric drives last a really long time, and they have the fine-tuned sense on it, so they're not like going to grind the motors for no reason. So these bots are going to last longer than 5 years.
Right.
So, 200,000 a year for 5 years, that's $1 million
in value.
Value, but they'll last longer than 5 years. But let's just pretend it's only 5 years.
Yeah.
You discount that back to today, and each bot's probably worth at least $600,000 to Tesla.
Right.
Now Tesla eventually will need to sell them to other manufacturers. They might sell them to suppliers at first, and they'll sell them. And our guess is they split the profit with whoever they're selling it to. So they sell them for 300,000. So Matt and I see this vision where Tesla can sell them for 300,000 plus for many years until they, hit really big scale, and like all the manufacturers are just kind of full, with humanoid bots. Like that would be an extremely profitable business that we put a value on in 2029 of 25 trillion.
Billion.
Might sound similar because that's what Elon said, his vision was worse, but he's looking at it in the extreme where you sell these bots for 20 grand each, and effectively they're going to do work for less than minimum wage.
Right. Way less.
So like this would radically change the economy, where they'll be doing jobs where like picking through garbage, which we don't do in the US, it could be used to set up clean energy. So like, set up solar panels, do all that labor, do the Tesla roof, all that.
Yep.
So, Elon's looking at that in the extreme and thinking that's worth 25 trillion as well.
Yes.
So, yeah, I'll just say we agree with Elon. Our math's a little different. And we hope that initially, if the bot is as useful as a human worker, that Tesla sells them for, if they're not using them internally, that they sell them for like 300,000 to other manufacturers, or lease them out at least 70,000 a year, if not like 100,000 a year to other manufacturers, because they would be doing $200,000 worth of work.
Yeah. So if you go back to like January, February of last year, I was saying $60,000 a year net. So whatever the so 70,000 a year gross might be the number to get to 60,000 a year net. And then, of course, what happens with that is now you've got this recurring revenue, which over a number, now maybe you give the guys a break and you say, look, after 5 years, it's yours or whatever, but maybe not. But if you get 60,000 a year, you not only get, as Cern Basher pointed out, and Elon agreed, you get to 25 trillion times a lot. And Cern says he doesn't even want to talk about the number because it's so huge that it's people just go, what are you even talking about? 25 trillion is already beyond people's ability to contemplate. Yeah. So a lot of different ways that this thing could go. So then the people want to know, when will the stock take this into consideration? I mean, it's one thing to wonder when they'll take the Cybertruck or the Cybercab, I'm sorry, not the Cybercab into consideration. It's a whole nother thing because it's multiples of value when the robot will actually start to really tickle the folks on Wall Street and the rabid retail stock buyers that are piling into NVIDIA right now.
Yeah, I think you would need to see Tesla grow faster because the bot is helping them scale much faster.
Really? Okay.
I think that's kind of how we would see it. I don't think it's in Tesla's best interest to say, hey, well, we have 10,000 bots working for us, and here's how much work they're doing, and here's how much they're saving us. I think that will tend to like get the alarm bells going off, and there'll be people who are just anti-progress. They want to save the jobs and all that, where, yeah. I don't think Tesla benefits from bragging about how many bots they have in the factory necessarily. But if we can suddenly see them scaling in various locations much faster, I think that's how we might know that the bots are working and they're very effective.
So you wouldn't anticipate that the beginning of actual sales are rentals to third parties, with those third parties like Pepsi, coming back and saying, well, we've been using the bots now for 3 months and we're getting this out of them. Tesla posting, a website which shows what the rental amounts are for these things. People can go ahead and put their applications in. to rent them. You don't think that would have the impact? Do you think it's going to take more?
I don't think that's the highest and best use of the bots initially, because I think that, like I said earlier, I think if you're selling it to someone else, you need to split the upside. You need to split the profit with them. I think Tesla should keep all the profit for themselves
For as
first.
long as it makes sense.
Yeah.
For as long as they can find useful applications.
Yeah. As long as you can have it work, fast enough to make sense, and they're not getting in the way and all that. Yeah.
Okay.
I'm actually concerned that they won't be able to feed the bots as quickly as they want. So like that the humans will drop the ball. So like the bots will be efficient, but then they'll be waiting for stuff from the humans. So like they'll need to do more bots to feed the bots.
Feed the bots. Well, it is going to be an interesting year. That is for sure. Now you had if we switch do you have anything else?
Tell me this, Randy. So you used to make bottles, right?
Bicycle water bottles. Yes.
Yeah. So if you could use them directly and profit somehow like $10 a bottle, would you rather do that as many times as you can, or would you rather say, hey, I'll sell them to anybody for $5?
Well, I think you have a very strong point, and I think that Tesla will use them internally as many as they can. But I suspect that Scott and I spent hours talking about this. There is a socialization or a app, what do you want to call it? Where you are bringing them on and integrating. That's what I'm looking for, integrating them into the lines. And so it may be that they can make a lot more than they can integrate.
Yeah. Okay.
And so at some point, and I think Elon thinks that's the end of 2025, because he said he's going to start selling them to third parties at the end of 2025. So somewhere next year, or maybe it's 2026, I believe they will begin to start selling them. But yeah, I would be, of course, if I still had my water bottle manufacturing plant, I would be champing at the bit to get at least 10 of these, because I could, out of my 60 roughly people that worked in the back, at least 10 and probably more of them could have been replaced with an Optimus.
What gives me confidence that Tesla will charge what they're worth is how they handled Cybertruck.
Yes.
The demand for Cybertruck was insane. A lot of people want to be first or get them early, and were willing to pay a serious premium. And Tesla asked for that premium out the gate.
Got it. Yes.
So I'm optimistic that they'll do that with the bot as well.
So I like to split the program. I don't know if people notice this, but I always do Tesla first, and then I go into the general economy. Before we talk about the general economy, do you have anything else on Tesla that has been high on your list of things this week?
Yeah, Elon just tweeted today about their need for cooling and compute, or compute related cooling and power. And he talked about, I'm going off of memory here, but like 120 megawatts by year end, and 500 by year end next year, maybe.
Something like that.
And Giga Texas is set up for 30, or
is that what
I'm not sure.
Yeah.
So like Elon is very serious about scaling the compute at Tesla, and it's been ahead of schedule, as we talked about earlier. So I'm pretty excited about that. Yeah.
It'll be interesting to see whether they now use a bunch of that property down there to set up some solar and some wind.
There was also a interesting video that Herbert and Brian put out, where they talked about the tariffs that Europe was charging Chinese EVs. And what happened in May is Tesla's sales of the Model 3 to Europe dropped quite a bit.
Yeah.
And the China market absorbed those. So their sales of Model 3 in China shot up.
Huh.
So I thought that was really interesting, but also positive.
Very positive indeed. Yeah, I happened to just watch, maybe you saw it too, the Edmunds the Edmunds guys going over their
Yeah.
favorite EVs, and the new Model 3 seems to be pretty much at the top of the list. They liked the Rivian a lot, but I think the Model 3 was pretty much their favorite. The new one though, and
Mhm.
it really panned the Model Y. And I was sitting there going, does anybody ever listen to me?
Mhm.
The things that they were talking about, they didn't like in the Model Y were the same things I've been talking about all along. They did say that the suspension on the Model Y has gotten better. They have they had one of the very first ones, a 2020. We're
Yeah.
driving a 2020, a late 2021. And he said they have been getting better and better, but they said they thought the 2020 that they have was one of the worst riding cars they've ever been in. So
Mhm.
I really, really look forward to one more thing I'm really looking forward to and very antsy about is getting the Model Y refresh, on the road. I think that will kickstart Model Y sales in a way that people will be shocked.
Mhm.
I think they'll be amazed.
There's an account on X, I think it's called Ryan's Model Y, and he went around, I think he's Australian, I'm not sure. He went around interviewing people. He said, what do you think was the best selling car in the world last year? And people thought it was a Toyota. And he
Right.
would say, would it surprise you if I told you it's a Tesla Model Y? And that was really interesting to watch, but also kind of depressing about the awareness around the world. Yeah, if they made the Model Y even better, yeah,
Yeah.
that would light a fire under
Yeah. And this
under
model,
things.
and I haven't been in the Model 3, but everything I've heard about it, including these guys, they couldn't say enough good about the Model 3 now. So we'll see how that plays out. All right. So you had something on the general economy. You had a chart. You had
Yeah,
something you wanted
this
to
is
share.
on the market as a whole.
Yes. Yes.
And let me share my screen here. So what we're looking at is the net income of the S&P 500, and the chart on the left starts in Q2 of 2021 and it ends in Q1 of 2024.
Uh-huh.
So effectively 11 quarters. And what we're seeing is that a net income in the S&P 500 has actually declined over the last 3 years, even though the market has really surged recently. So what's interesting is that buybacks have really been driving earnings
Oh,
per share. So
uh,
like the earnings haven't grown, but buybacks have grown the earnings per share. The other thing that's a bit damning about this is the S&P every quarter or so, they get rid of companies that are unprofitable
right.
and they add client companies that are profitable.
Right.
So they're basically this number is getting goosed by them making these edits
Yeah.
to the S&P 500, but still it's not enough. So really what I think we're seeing with the market is they're looking forward to growth and profits in the future. um, they're being a bit goosed or influenced by buybacks from these companies. But I felt it's a bit concerning where, Nvidia just keeps going up relentlessly. And I have clients who want me to buy Nvidia for them. Like they didn't want me to buy it for them at 200, but they want me to buy it for them at effectively 1300 or 1400.
Right.
So, we have to show them our valuation for Nvidia. We've actually done work on that. Um, and talk to them about buying low and selling high and all that good stuff, not financial or investment advice.
Right. Right.
But
Right.
I think there's a lot of complacency in the market right now, and that concerns me. And there's a lot of FOMO.
Yeah. Yeah. So are you gonna I've been saying it daily now for I don't know for 4 months, 3 months. There's gonna be a pullback. We're gonna see an S&P 10% pullback, 20% maybe.
Yeah, yeah, I wouldn't be surprised by it. I'm not necessarily, excuse me, I'm not necessarily making any moves to try and anticipate that, but we are managing risk. We have trimmed certain names that have raised higher, and so we're doing prudent risk management. We're not like FOMOing into the best performing names just because they're the best performers and have the biggest momentum. That's just not our style.
Right, right, right. So my theory is that we have to have a pullback. It's just too crazy. Say a 10 to 20% pullback, but that we will end up higher by the end of the year, because historically you cannot get this far into the year with this kind of a gain and not end up higher at the end of the year. It never happens. I mean, like 3 times or something. But when you have this kind of gain, you have the big January gain, then you have the first quarter gain, then you have a second quarter, that you almost, 90 times out of 100, more than that, 97 times out of 100, you end up with a positive year. And we also probably have a change of government, which that usually also contributes to a higher end of the year. So, of course, if we ended up not having a change in government, then there's a real good chance the last 3 times that we've had the current administration continue for a second administration, all 3 times it's been lower by the end of the year. So that's a pretty big, if I remember my stats correctly.
Yeah. The other thing we've shared recently is how the Magnificent Six have basically driven 80% of the gains in the S&P over the last 5 or 6 quarters.
Yes.
That's a real shocker, where over those quarters, the Magnificent Six have done like 120% return, something like that. And the rest of the market is just barely over 20%.
Yeah.
Yeah. So
then that brings up another one of my theories that I just threw out the other day to, I think it was to Nicholas. Was it Nicholas? Anyway.
I'm going to pull up this chart.
Okay.
That shows it, but go ahead.
Yeah. So maybe it was to Larry last night. And of course, Larry didn't think I was right. I think he thought I was partially right. And that is that we might be entering into a completely new era. That this AI, AGI thing, the robots, the cars, I mean, we've never seen the kind of technological change and the possible productivity change and the potential kinds of market caps of, having 3 companies now at 3 trillion, all 3 of them now, people wondering when they'll hit 5 trillion, talking about Tesla being 25 trillion. We've never seen anything remotely like this, that maybe we're going to be in kind of a new world. And the impact in terms of individual wealth is already massive.
Yeah. Is this you saying this or Larry?
This is me.
Okay.
Yeah.
I would agree. So last May, May of last year, we did a presentation. We said that the next bull market is going to be driven by AI, and the secular bull market, decade long, going to be driven by AI. So that I was actually thinking about the same thought you had this morning when I was walking in is, yeah, maybe we're seeing it where people are just looking forward and seeing the lowering of cost and the increase in productivity, increase in value to your customer. That's happening because of AI. That's why we originally bought into NVIDIA in 2021. So here's the chart we showed with the Magnificent Six in a recent presentation we gave to clients. And so it's kind of farcical. The S&P 500 is 500 companies.
Yes.
But 6 of the companies have driven over 80% of the gains.
Yeah.
It's just nutty. So like if you did not own the Magnificent Six in that proportion, your performance is really stunk. And
exactly.
Like I don't besmirch anyone for not owning them and as great of a percentage, because like I don't think it makes sense to just own the biggest companies because they're the biggest.
Yeah.
that's just me. That's my style.
Well, if we listen to the leadership, if we listen to the guys that own OpenAI and NVIDIA and Tesla, et cetera, we're kind of like the early stages, the 1994, let's say, situation with the internet, where the people who were making money on the internet in the first couple of years were the companies that were building the internet and providing the routers and all the things that people had to have. But then technically by the end of the 90s, it was the people that were making the applications and helping people build websites that were making the money.
And then
they crashed, but I don't think that's going to happen this time.
Yeah.
Now, there may be some. We might have some companies.
But then you had other companies build on even further.
Build on that. So I'm thinking, so if I'm looking long term, I'm saying, okay, we got to have a pullback, because when anything gets too far out there, somebody takes a profit. And when somebody starts taking a profit, other people follow the leader and they take profits. So that's why I'm saying we're going to have to, I don't think it's a fundamental problem. I don't think there's a problem with the fundamentals of the underlying S&P. I think it's going to be a technical pullback, probably no more than 10%. But then we could see a run from there that could be historic and make the historic ones that we've just been experiencing small, if we start to see the productivity flowing down to the rest of the S&P, to the mid caps, to the small caps, and to the mom and pops. If we start seeing the flow down of that productivity, it could be absolutely amazing.
Yep.
All right. Well,
right now we're seeing the profits accrue to NVIDIA and not really increase the rest of the S&P 500 profits.
Oh, and it gets worse.
So I think we could be in a very similar Rayman type of phase. Yeah.
Yeah. No, it gets worse as you go down. The mid caps aren't making money at all. The small caps are losing money. Well, 40% of the small caps are losing money. And then you've got the mom and pops.
Well, that's just generally true of small caps, though.
Is it 42%? No, it's a high number. 42 is a high number.
Okay.
And then the mom and pops are screaming. They're just really, I don't know if you watch the Federation of Independent Business report each month, but it's a really important one to watch. The mom and pops are screaming. They're screaming the loudest that they're pretty much at the level of 50 years since they've been this unhappy. Well, why don't we look at what the market is saying about all this? We've got the Dow went up 300 today, and the NASDAQ dropped 140, and the S&P dropped 13. And I was kind of surprised by that result. I didn't anticipate, this has got to be some money flowing out of the tech stocks into value, or into what's considered value, or into companies that are paying dividends or something, doesn't it? I mean, that big of a difference today, all of a sudden?
I didn't catch that. I'm sorry.
Oh, you didn't catch it? Oh, I see. Not paying any attention. Do you think there was a flow out of tech, just the money flow out of tech into old companies, solid companies?
Yeah.
Dividend payers. Is that what this was all about today? It was huge.
I'm not going to make too much of one day.
Okay. All right. We'll see.
Let's talk in a week.
All right. Okay. We'll talk next Thursday. Tesla was down 329. It is down another 7 cents in the after hours. We're still hanging in there above 180 though. I thought that was very good that it has not penetrated back down under 180. So we'll see if it can be sprung from here to pass the 200 mark. Let's see here. Bonds, I believe, had another, my computer's not telling, okay, here we go. Bonds up. I'm sorry, yields up. We had the 10-year up all the way to 4.25554, and then up another 0.7 of a basis point to 4.261. So after looking like the bonds were going to really, the yields were going to drop a lot, they've now popped back up. The 2-year also 4.739. That is Now a full over 50 basis points wider on the spread. That's the first time that's been true in a while. And the 2-month up, also, it is now well over 100 basis points, like 110 basis points spread again. So that's another thing that makes me wonder if we're in a new era entirely here when we see 24 months now of this spread.
Yeah,
Yeah.
I think, yeah, I give up. I think we all give up on the recession and all that. Yeah.
All right.
The new era.
We've got the
We're
oil.
going to the moon, and it doesn't matter the yield spread.
The oil patch is unch. And for those of you who are new, it's unchanged. That was invented. You invent lots of words. You invented mega factories.
Mega factory, yeah.
And unch, is that something you do for?
No, I did not invent that. No,
you didn't invent.
that's
unch?
trader talk.
That's trader talk. Okay, all
I
right.
used to be a stock options market maker at the Chicago Board of Options.
Oh, okay, okay.
Mhm.
Natural gas down a little bit after being up a bunch today, sitting at 272. Gold up another 820. It has been up all day long, quite strongly, back to 2377. So pushing up towards the 24s again. Silver also has passed 30 at 30.85. So, and then copper going along for the ride at 456. Not close to the 510 that it was, but at least moving in that direction. Turns out, I don't know if you heard this morning, it turns out there is warehouses full of copper in China.
Yeah.
Apparently nobody knew this.
Yeah, it's strange that it suddenly came out.
Yeah, is that weird? So anyway, then we've got the dollar.
And that might have been like FOMO related, where people are stockpiling it, like betting it's going to go to 10 or something like that. Or yeah, maybe they're using it for collateral for trade. We don't know. So it's a little suspicious that the story just suddenly comes out.
Oh, yeah, exactly. And the dollar firm and the Bitcoin, it's just flat. It went down and now it's flat. 64, 65 is the new range. Been that way for a few days.
Yeah, I wonder about this yield curve inversion. Like, people are scrambling to invest money now in these AI data centers and some other things. And so like demand for money today is very high. Yeah. And we're not sure about demand or investment 10 years from now.
Yeah.
So maybe that's a reason why yields should be higher on a shorter term basis.
Yeah,
who knows?
It's a quandary. It is a quandary. All right, the equities, Dow is down 5 in the pre-market. S&P is unch, and the Nasdaq is up 21 or 0.11%. So a little bit of reversal. See, your data point is already turning here. So the Dow is the Dow and the Nasdaq have reversed from the trend of earlier today. All right, that covers everything that we cover on the show. Is there any last minute stuff that you feel passionate about that you feel you should share with us before we go?
Not really. Let's end it here.
Update on your thinking about the Fed cutting this year, or do you care?
I think they might. But like, so the market's at 1 right now. One cut.
Market's at 1 and change.
Yeah.
Not 2. Yeah.
Yeah, I think they might. They seem to be happy where they are right now. So until we see a recession, I may not. The Fed tends to be late. They're a committee. They tend to be late, and the people who don't want to cut, they're the ones slowing it down now. They were the ones like trying to do the opposite, when they went into raising, but
Right, right.
they were the first to want to raise, but now they're slowing it down. So, absent a recession or the more significant signs of recession, I don't think why would the Fed be motivated to cut?
Yeah. Do
Um,
you just,
I guess one thing that happened though is you had Canada cut,
yeah,
you had Europe cut rates. So that might do some stuff with currencies, and there might be some pressure on the Fed to cut to like help keep the dollar at a lower level versus the other currencies.
right,
So
right,
the dollar doesn't get too strong, which can hurt the
right.
US some at times. It just depends.
I'm curious. I don't think you and I've ever talked about this. Do you think that the current interest rates are restrictive?
I would say so. Like people, if you have a 3% mortgage, you don't want to get into a new home and
Well, that part is for sure.
suddenly have a 7% or an 8% mortgage.
Yeah. What about
Um,
just on the day-to-day stuff though? Consumers going out to buy a car, it's 9%, which is not that high compared to history. You want to buy a house at 7%, not that high compared to history. I mean, credit cards, who knows anymore how they can justify
mm,
21 or 23 or 25% or whatever. But in across the regular, I just wonder if it's really that restrictive in terms of companies and or individuals making purchases. People just find a way around it. They find other ways to do it. Or they just
mm.
say, I'm going to buy it anyway.
So I'm trying to have an open mind. So,
Okay.
thinking about it, the US government borrows money at 5%.
Right.
So for mortgages to be at 7, that makes sense to me. Like the normal person should pay more
Right.
than the US government. The US government's going to be good for their money, we think.
Right.
Um, and then, other companies are worse risk, when it's not securitized by a building and all this stuff. So I think rates make sense where they are in relation to the government paying 5%. Um, I thought rates were way too low at 0. Like that didn't that didn't make any sense to me either. Um, so maybe you're right that this is more normal.
Well, it is
My
normal.
dad, when he first moved to Indiana, I think his mortgage was 13%
Yeah, yeah,
in
yeah.
the early 80s. Or
Absolutely.
yeah.
Absolutely. Yeah. And I've had a bunch of mortgages and most of them have been, in the 5 to 6% range
Mhm.
until 10 years ago. Yeah. So I don't know. I'm just not sure it's restrictive enough. And Powell even kind of hinted at that one time. He says, well, maybe they're just not restrictive enough to get the economy to slow down. And I'm not 100% sure he's not right. But I also believe that eventually productivity will win the day, no matter what Powell does. Whatever the Fed does, eventually the productivity will come in and prices will go down because of productivity. Well, all right. I didn't intend to start an entire new program.
That's all right.
Thank you so much, Bradford, for coming on and doing this. And you guys, follow him on Rebellionaire everywhere that Rebellionaire is, rebellionaire.com, Rebellionaire, the video YouTube
On
channel,
YouTube. Yep.
all that kind of stuff. And then if you've got a couple of $1 million, you don't know how to invest it, he might be the guy.
Mhm.
All right. So, and for all of you out there that have been watching, it's been great talking to you.